Hey everyone, welcome back to Corporate Decoder, the place where we decode the business world. Today we're diving into a report so twisty, you'll need a financial compass and maybe a strong cup of coffee. Let's just say this company's financial journey is less a straight line and more a choose-your-own-adventure book, where every page seems to lead to more questions than answers. This report is about PHI Group, also known as PHI Global Group, a company with fingers in many pies, from mergers and acquisitions to funds in Luxembourg and even a diamond exchange in Vietnam. But are they building an empire or just shuffling assets? First, let's talk about what PHI Group actually does. They're involved in a lot, including setting up investment funds in Luxembourg, helping other companies with mergers and acquisitions, and trying to create a diamond exchange over in Vietnam. They also mention working on clean energy technology. It's a diverse mix, to say the least. Now, who's actually in charge of all this? It's not just one company, but a bunch of them all linked together under PHI Group. This includes PHI Capital Advisors, PHI Global Advisors, and several companies over in Luxembourg. This kind of structure can be complex, and it's something to keep an eye on because it affects how the company reports its financials. This is an interim report, meaning it only covers part of the year. It doesn't have all the details you'd find in a full annual report. Think of it as a progress report, not the final exam, because it's just for part of the year. Some details might look different than they would in a year-end report. Accounting can be tricky, and management needs to make estimates for things like asset values and potential losses. These are educated guesses, and the actual results could be different. It's something to keep in mind when looking at the numbers. The company considers anything that can quickly be turned into cash within 3 months as cash equivalents. It's basically their easy access money. Accounts receivable represents money owed to the company, but as of the end of December, they don't have much in the way of physical property like buildings or equipment. So this isn't a company with a lot of heavy machinery or real estate. When a company provides services, they get revenue or income. They follow specific rules to determine when to count that revenue. For PHI, they recognize income when they've actually provided the consulting or advisory services. Sometimes companies give employees stock as part of their pay. There are rules on how to account for this, spreading the cost over the time the employees work to earn the stock. Like all businesses, PH Group faces risks and uncertainties. For PH Group, it means they're subject to economic ups and downs and the success of their clients. It can affect how much those securities are worth when they're paid out. Accounting rules are always changing, so the company has to keep up with the latest standards. New rules can sometimes affect how they report their financial information. They didn't have any properties or equipment at the end of the year. Their investments in PHI Global Funds make up the bulk of their other assets. It's essentially money they've put into their own fund. These are the bills the company has to pay soon. PHI owes money for unpaid bills and expenses that have piled up. This includes salaries, interest on loans, and even a small American Express bill. They have loans that need to be paid back soon. So these are special loans that can be converted into company stock. PHI owes some money to its own officers. These are loans or payments they haven't yet made to the people running the company. This is money they've received upfront from customers for services they haven't yet provided. Most of that money owed to officers is owed to Henry Farman, the chairman and CEO. Now, for the complex part, loans and promissory notes, some of their loans have extra conditions or potential claims attached, making them more complicated. Now, for the good stuff, at least that section's what they call the money they lost. They calculate their loss per share, which is a key metric for investors. The company is allowed to issue 60 billion shares of common stock. That's a lot of potential stock. They have a plan to give stock to employees and contractors. Here we're talking about deals they have with people connected to the company, like paying salaries. And that is the list of who the money is owed to: the chairman, CEO, and treasurer with the amounts. The company has agreements that commit them to future actions or payments. They have a deal where an investor can buy up to $10 million worth of their stock, which is good if they need money. Teco Group has promised to invest $2 million into one of their funds. They claim to have financing agreements for up to $6.5 billion, but mention they've had delays. The company has lost a lot of money over time, and they might not have enough cash to keep running. This is a big warning sign. Since the end of the quarter, they say they received a promise for over $10 million from an organization in Dubai for development. If it happens, this would help a lot. Switching gears from raw financials to management's perspective, the next section discusses the company sector's finances and what might affect them in the future. Keep in mind that future results are never set in stone, so take these claims with a grain of salt. This is where they talk about where their money comes from and what they spend it on. Earnings per share is basically how much profit or loss is attributed to each share of stock. It is also an important value that is worth knowing about. The company has a lot of stock they're allowed to issue, but the amounts are still the same for June 30th, 2024. Here they describe how they handle stock options given to employees, which are a way to compensate people without spending cash right away. A lot of these numbers involve estimates, and the actual results could be different. And at the end of the report, the company talks about any major events that happened after the end of the reporting period, but before the report was released. They just note that the report was approved on February 19th, 2025. Now, let's step back and look at the big picture. Based on this filing, PHI Group has some serious challenges. The company is involved in a lot of different ventures, but it is not making much money and is still very reliant on new loans and promises of future investments to survive. One major strength of this company might be its leadership. The people in charge have connections and they manage to form these partnerships and get some funding. However, it also has key weaknesses. Debt is piling up and the company is highly dependent on closing these huge financing deals that are not set in stone. This dependence makes the company's future unclear. Also, because of all the complexities, it's hard to come up with a solid valuation for this company. If everything goes their way and they land these investments, it could be worth substantially more. If not, the value could plummet. Given the uncertainty and the losses, along with the difficulty and scale of its business, the price range is very hard to call and makes it hard to know the current state of operations. But based on the reports, I am leaning towards a bearish outlook. Thanks for watching. If you found this breakdown useful, please like and subscribe for more corporate decoding.